All right, my name's Andy. My channel's Finding Value, and if Finding Value knows what he's doing, and let's say my thesis on real estate going higher, creating inflation, higher interest rates. If we're getting higher interest rates and the market's doing what I say, what I think it's doing, we should see technology struggling to go higher. Now, it doesn't mean that it's just going to tank. It could. I'm not saying it can't. May not tank, but we should see it struggling to go higher as interest rates go higher. That is the net present value calculation. When they discount this back to a net present value, they're using a higher interest rate, which means that they're going to pay less for the stock, which shrinks the PE ratios. So let's look at the technical analysis of technology. I'm not anti-technology. I'm pro-technology. I'm just anti the stocks under these conditions. So let's look at the technology sector. Let's see if it's struggling to go higher. So here's technology. And remember, I always like getting a full perspective at looking at all these different sectors. So technology, higher interest rates usually damages the technology sector of high growth future earnings companies. And what I mean by damages, they don't go up. They either go sideways or down a little bit, or they meander around, not really giving a good return. They underperform all of the other assets, not all the other assets, commodities, precious metals, the good assets that we want. The net present value calculation when using higher interest rates discounts stocks differently and results with the lower net present value and a lower PE ratio. So this will compress the PE ratio of companies with higher growth. Higher interest rates shrinks PE ratios for stocks. That's the takeaway. Again, this is only financial education. Do not base your financial decisions off this information. And let's get started. So here's the copper to gold ratio. I'm going to start with that. When the copper to gold ratio goes higher, this is the leading indicator that most likely interest rates will follow. We are in an uptrend. Here's the uptrend. We hit the trend line pattern and bounced off it strongly. Big move higher, two little small down days. Signature trait of going higher. Now, if the copper to gold ratio goes higher, more than likely interest rates will follow. What are interest rates doing? They're hit this, hitting the trend line, coming on up, hitting the trend line, and I bet you we're going to see a move higher, guys. We're going to see a move higher very soon in probably yields. What does that mean? It means that oil is going to explode higher. It's going to mean that we have inflation expectations coming back. We had this nice little pause period of yields, and gold could come under pressure because if those interest rates go higher, unless inflation is really seen in the system, gold will overpower the interest rates, but because it's off of real negative yields. But I think this is going to go higher very soon. Yields are. Now the NASDAQ, here's the NASDAQ. I put a line in here. Is that a shoulder, kind of head shoulder developing? I don't know, but it could head lower. Oh no. Hold on, guys. I'm going to check one last thing here. If I were to do something like this. Ooh. We could have this move up higher. It broke down, and we're doing the back testing off this line, and this could roll over here and head lower or go sideways for a long time. Could. Here's the trade desk. It looks like it peaked, and we're heading lower here. We've been heading lower. Didn't totally fall out. You can see a big volume sell-off here. It is heading lower. I'm looking for volume here. The volume isn't super high, but we're making lower highs here. And if this thing turns around and comes back down, it could go quite a bit lower. Roku, same thing. We're going in this downtrend line. I don't know if this is going to roll over and come back down or if it's going to break and move on up. If interest rates go higher, I'm banking that these are going to come back down. This is going to come lower. Here's Tesla. We got the line here. If it breaks this support area to the downside, we could see this fall out quite a bit. Not looking good. Amazon, we're stuck in channel land for Amazon. This could be a double top. If this thing heads on lower, shoulder, head, shoulder, I don't know. We'll see. We'll see if this thing holds this line. If it doesn't, channel land will be a little bit of a push off to go lower. And here's Apple. Apple is kind of squeezing up here. We're hugging this bottom line. Usually on a break, you hug either the top line or the bottom line. Are we going to break to the downside here? I don't know, but I would not bet against that. The volume kicked up a little bit over here. We got some sellers. I know Warren Buffett got the heck out of here. Shoulder, head, shoulder. Ah, man, I don't know. If interest rates go higher, I think this thing's gonna break down. So, takeaway here: technology. Some are pulling back. Some are going sideways. The leaders are going sideways. People are going to say, "Oh, they've got good earnings. They've got good this. They've got good that." Well, PE ratios shrink when interest rates go up, and I don't. Maybe they pull off the sideways move for a little while. I'm not convinced that these are just going to rocket higher. Maybe they will. Maybe they will. It'll probably be good if they rocket higher, because then more money will just keep flooding into the market. But watch the downside here for some of these technology companies. They don't look super strong. They look like they're a little toppy. So I'd be watching it, and whatever it happens, I'm not in these. I'm just looking at different sectors, seeing what they're doing. But I think we're going to start stealing money from these guys into the commodity sector, and that's good for us, because I don't think the money's going to flow over here, especially if interest rates go higher here. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.